Happy market update day, everybody. Super excited to bring this report to you. We got it a week early from the Beacon report this month. There's just so many competing factors in the market right now, and it is creating lots of opportunity for our clients, both on the buy and sell side. We're going to get into that right now. So, the two competing factors in the market are mortgage rates that are bringing pricing down, downward price pressure, and lack of inventory that's putting upward price pressure. So it's this epic battle, and for those of us who are following it, it's quite interesting to watch it play out. So what we can see, rates tick back up to 6.5. As you can see, this last 6 months we've been rates at 5, rates at 6, 7, back down to almost 6. So it's just up and down. And every time it makes a half point move, the market conditions change and the way to compete in the market changes. We're going to talk about that today. This is the chart for all charts for interest rates right now. 6.5 is the middle point. When rates go below this, buyers come out in droves because the payments go lower. It's much more affordable. However, when there's all these buyers in the market and no listings, the bidding wars have been coming back. So, yes, you get a low payment. It's great to lock that in. However, you're going to have to compete with other people to get the inventory. On the flip side, when rates are above 6.5, there's less buyer competition. A lot of people think, oh, I don't want to buy right now because rates are high. However, that creates an opportunity for the folks who are able to see the strategy and negotiate for seller rate buy down credit, because you can get a better price on a home when the rate's at 7.5. The seller will then pay for a 2-year rate buy down, so your rate's back to 6% for 2 years. And a lot of folks are thinking that rates are going to come down in the next 2 years because inflation is on the run. So there's opportunity on both sides when rates are higher and lower right now. This is factor number one. Factor number two is the lack of listings. So here's the inventory, or the number of listings for 2022 is less than it's ever been. Number of homes for sale nationwide right now is right around 700. This is much less than pre-pandemic levels. So we don't have the pandemic bidding wars, but we still have the pandemic level inventory. So the inventory is keeping pricing high. Most people don't want to sell because they have a 3% interest rate. Majority of homeowners were able to refinance during the time of low interest rates, and so there's a lack of motivation to sell for a lot of folks. Okay, this brings us to our price update for the month. Median home price in Bend ticked down to $660. That puts us at levels from the end of 2021. So we're back to kind of November, December price levels. This is the number of sales. So as we mentioned, the phone started ringing in January after the turn of the new year, and we expected additional closings in February, and it did go up about 30%. Would expect this to go up again in March as things pick back up for the spring season. As you can see, the seasonal trend, the most activity typically happens in late spring, early summer. Days on market ticked up to 51, and that's coming in line with the active listings on the MLS. So 51 days is almost the exact same as it is for active listings as closed. You can see here pricing down 3%, closings were up 30%, days on market up inventory staying the same at 1 month. This is the MLS data. This is the active listings. Active listings are only 46 days on market now. This was as high as 90. So what I think happened is a lot of the old listings that had been on for 80, 90, 100 days were some of the first to go when people came back to the market in January. They took advantage of those deals, and so that cleared out the inventory on the MLS that was sitting there for 100 plus days. You can see about half the listings that are live have done a price adjustment. That average price adjustment is now 5.7%, where it had been close to 9% that people were mispricing. Bottom line this month, so interest rate volatility is providing great opportunities when rates go down to lock in your interest rate. You got to be prepared to move quick and compete with other people. Multiple offers, weekend number one, when rates are low or when properties are priced right. When rates go up, prices on the houses come down, so it sort of evens out a little bit, and sellers are more willing to offer concessions, rate buy downs, that sort of thing. Low inventory means there's not a lot of seller competition if you're a seller and you're priced competitively. That's keeping the market buoyant, the lack of listings. So really it's just kind of up and down. We're expecting a lot more of that this year. So if you are in the market, buyer or seller, keep in mind that there are ways to take advantage of this volatility right now. And selling and buying is actually a pretty good experience in the market right now, as long as you're realistic on your pricing. So if you or anyone you know is having any situations you want to talk about, want to chat about the market, we love this stuff. So reach out to any Ben Relo agent.